Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 29th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. But I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, here in the United States, we do have some economic data, despite the fact that it is a Monday. And as a matter of fact, we got February's data also, because we had a holiday and they didn't release it on the correct, or they weren't able to release that data point. So if we look back at core personal consumption expenditures, which is PCE, price index came in at 0.1%, expected to be 0.2%. This is for the February data. And then personal spending came in at 0.1%, expected to be 0.2%. Now, the previous month is the way that this always is. So that was February data that was supposed to be released in March. Now we have March data being released in April. You can obviously tell these are somewhat of lagging indicators, right? Meaning some of the information is already out. We got personal spending coming in at 0.9%, higher than the expected 0.7%, so that's pretty good. But we did see personal income come in lower than expected, 0.1%, expected to be 0.4%. So we've seen a couple of these credit card companies come out with earnings, and they've beaten on earnings. It looks like a lot of people are spending, but not having the income to make up for that. They're increasing their spending rate, but their personal income isn't staying up with that, which usually means that we are running a debit, right? We are running less than what we can afford in a sense, and a lot of times that will then be put on a credit card, okay? And that's something we need to note coming into earnings season. We've seen Visa and Discover Card both beat on earnings. This is probably one of those catalysts for that. All right, let's talk about the overall markets. We've got crude oil right now just slightly coming off. It's trying to get above this 23 Fibonacci area that I've talked so much about, that once we broke below that on Friday, that was starting to look pretty bearish, okay? So we've seen that bit of a correction. As a matter of fact, when we topped out here, this is the day I bought the half tank of gas, and then we free fell afterwards, broke below this Fibonacci support right in and around $63 a barrel. Let me just pull up my little marker here. So right now you can see 63.08 is the Fibonacci line that I have, but we kind of come over here, the 23 Fibonacci extension here. As you can see, this is the line we're talking about. 23 Fibonacci lines up with $63. Right now we are about a couple pennies above that. A settlement above this line is going to be a nice win for the bulls. Let me pull this out a little bit further. Anything below that level is going to be a win for the bears. I would like to see it continue down and fill in some of this area right here is what I've been looking for quite some time. Hasn't happened yet, but we are starting to get closer to that move. All right, we can look at gold futures. They're coming off. A lot of these levers and pulleys we were talking about on Friday was just not making sense with like the bonds moving higher, gold moving higher, equities not really looking like they were in too much turmoil, and we have had pretty good economic data coming out at that point. Remember, we had the GDP number. So that gross domestic product, that should have caused gold to come off, bonds to come off, the equities to rally, but we weren't seeing all those levers and pulleys. So today it's starting to follow through. You can see with gold back down $8 on the day, but again, following with that 1280 area as the support level. That has followed or has shown support in the past and or resistance. And as you can see today, it is acting as support. What I'm talking about here is it acted as support back in this area all the way down. It's been fighting in and around this 1280 area. Now the point of control obviously up here, but I think with the economy, if it starts to do well, which we're seeing with that GDP number and some of the economic data points, I mean, it's not robust, but it is doing well, would make me believe that gold needs to come back off a little bit, as it won't be a flight to safety or an inflationary gauge and stuff like that. We're just not seeing the inflation show up in the market. So I'm expecting gold to continue to roll over. Again, break below this 1280 area, or what lines up with this 61.8 Fibonacci level. So gold looking a little weak, and I expect it to continue to see that weakness going forward. All right, bonds, this is what I was talking about. We got a full engulfing candle. I even talked about this on Friday. I would expect us to see a full engulfing candle on Monday, and that's what we're seeing as the overall market's starting to roll over. Remember, we talked about the levers and pulleys of the markets. As the bond prices start to go down, as we see bond prices going down, that means that the percent or the interest rates are going up. And with a good economy, that's exactly what we would expect to see. Good economy, because when the market starts, or when the economy starts churning, then people like you and I can actually spend some more money. We're making more money. The overall economy has a confidence to it as everybody starts talking to their friends and sees everybody's fully employed and everybody's starting to make money. We become more confident. We loosen those purse strings a little bit and start spending. Those types of situations cause inflation to rise. Well, if inflation starts to rise, then we have to raise interest rates, because interest rates are a product of the Fed trying to crimp your spending when they see us getting a little bit loose with those purse strings. They raise interest rates to try and create a saving type environment. And right now they want us spending. Okay, then we go over to the VIX. VIX is trying to, pop a little bit. It is off the lows, but for the most part, we are out of the teens here. Let's get on with the equities. Dow Jones Industrial Average is only up about 17 points right now. We've got the NASDAQ slightly in positive territory, about 6, but the leader today seems to be the E-mini S&Ps, as it's decided to make its 52-week highs, or historical highs for that matter. And we are just piercing above that, looking for a 3,000 handle. People getting their SPOO 3,000 handle hats out. I don't know. But we can see the market starting to push here. A settlement makes this doji, look a little toppy. Right now, not necessarily so, but I think that the market is just due for a little correction. I'm not saying a correction down to these levels, but I do think that we need to at least come back down and test the value area high, shake out some of those weak hands before we start moving any further north at this point. All right, so I haven't added anything to my overall portfolio, but we'll take one look at the mini S&Ps on the 30-minute chart before I start talking about that and getting ahead of myself. We can see overnight inventory decidedly long, and then coming into the open of the day session, those weak hands got flushed out. That's something we like to see heading into the day session, the weak hands getting flushed out from the overnight session, whether they're long or short, because then it makes that move a little bit easier to discern when we start making these rallies. And a sell-off towards the end of the day is going to make this chart look pretty bad. If you're bullish, you want to see this day end near the top range, at around 29.50. And if you are bearish at all, you'd probably like to see this trade all the way down to 29.38. So so we could say it's 29.40 or 29.50 is where people would want to see that kind of settlement to follow through with their directional assumption. All right. Google's the only thing that I'm going to be really looking at for earnings. We do, like I said, we have Google. We also have, for earnings, we have MGM coming out with earnings. We also have Yum Brands coming out with earnings. There's a bunch of other ones that I'm probably not going to look at, like Texas Roadhouse. I'm not going to play in that market. And that's about it for any of the major ones that I've seen right now that I would really actually be considering something to trade. Berkshire Hathaway also, but I'm going to stay away from that. MGM, Google, which is probably the one that I'm going to do, GOOG or Google, whatever, Alphabet. Those are the trades that I'm going to be looking at for earnings today. So check those out Follow me on Twitter at Wolfman's blog, because I will tell you if I'm doing MGM, Yum, or Google and what I'm doing. It's up to you to know what my rules are for these earnings trades, but we will be talking about those today on Twitter when I decide what I'm going to be doing. All right, that's all I got for you guys. I hope everybody had a great weekend and are ready for a robust trading week ahead. We've got earnings coming in heavy, and some of the big names are starting to come out, so we are going to be busy. So follow me on Twitter at Wolfman's blog. That's all I got for you guys, other than if you can't take that, take it easy.